SuccessWare as a full accounting package allows for departmentalization. We do this without the use of subaccounts. Departments in SuccessWare are really just areas of your business on which you'd want to be able to apply revenue and cost, as well as be able to run an income statement. We're going to take a look in this video at how departmentalization is structured and how we apply departmentalization through our work. Let's start by taking a look at how departments are set up in SuccessWare. By going to Setup, General Ledger, and going to the Department tab, you'll see a list of the departments that come with the software by default. There are 4 options for what we do with departments. We can create new ones, edit the existing, deactivate, or delete. You'll notice that department codes are made up of a 2-character value, in this case a letter and a number, and with the default franchise setup, each department is represented 3 times. The 3 departments listed are meant to allow you to accommodate for multiple locations that you may have. So all of the residential service departments or repair service departments at one location are represented by the R1, and R2 could be a separate location, R3 another location again. In my setup here, I only have a single location, so we're going to use the deactivate option to get rid of some of these extra departments. Now when they're deactivated, they're simply set aside, and they can be reactivated at a future point if I were to say, get a second location. So when I deactivate, they're moved down to the bottom of the screen. I'm going to go through and get rid of the rest of these. Now if I don't need a department, I know I'm never going to need it, I can right-click and delete the department as well, and that will remove it from the list permanently. Again, departments represent areas of my business on which I want to report expense and revenue. Now one of the things I can do here is I can edit a department, maybe change its name a little bit, make it a little bit more understandable for me. Or there may be a department that I need to add all together. Maybe we have a small electrical division within our business and I want to have a department that represents that. So here I've added a department ID and a name. Alright. So getting my department list set up is step number 1 to departmentalization. Understanding departmentalization also requires you to understand how items are posted to the general ledger in SuccessWare. In this portion of our video, we're going to take a look at how SuccessWare knows where to post a general ledger entry for an item in our price book. And that's going to help us to understand how we know what department to post to as well. Each item in our price book, a list of items that we buy and sell within SuccessWare, has associated with it a sale type or an expense type. Sale types and expense types are pointers to the general ledger. Sale types represent all of the different types of things that we can sell in our system, and these are included on accounts receivable invoices. And expense types are associated with items that can be purchased. So these are going to be included on accounts payable invoices, inventory transactions, and purchase orders. So again, sale types identify where revenue goes. Expense types indicate where expense posts to the GL account. Now each of these are a drop-down list, and if we take a look at our sale type drop-down list, you'll see a short list that represents the different types of things that we sell. And for that type of sell item, we have a GL account associated with it. So repair service is going to post a 3005, which is flat rate repair in our general ledger. Expense types are set up the same way. There's always going to be more expense types, all the different types of expenses that we encounter. So we have all these expense types listed, and again a pointer to a GL account. We'll look specifically here at one called software licensing and fees and see that that's posting to a specific general ledger account. Now each item in the price book is associated with a particular sale type, expense type, or both. So a part can be both bought and sold, so it can generate both revenue and expense. We'll start off by looking at an overhead item, an operating expense item. So when I pull up my list of all of my different operating expenses, these are the items that are going to appear on my accounts payable invoices. I can select any one of these, open it up, And you're going to see that attached to this item, so in this case your SuccessWare licensing fee has attached to it the expense type of software licensing that tells it to put it into that particular general ledger account. Okay, and every item in the price book is set up the same way. So we'll take a look at a miscellaneous item here. I'm going to go and take a look at a permit. This permit, when purchased, is going to post into a general ledger account with an expense type of cost of sales permits. Tasks can only be sold, so they only generate revenue. So we look at a particular item in our task list. We're actually going to go to the category itself and see that everything within this category is going to post to 3005, a specific general ledger account. So anytime we sell one of these tasks, the revenue is going to go to the same place. Now let's take a look at an example of how this is used and how the departmentalization comes into play. So here's an invoice purchasing a permit from the Erie County tax collector. When I put that line item for the permit on the invoice, you can see here that it has associated with it the expense type of permits, and that points to that particular GL account. We've also identified the specific department that's purchasing this item. So you'll notice my department here is I1, that's my install and replacement department. When we post a GL entry in SuccessWare, we're hitting the GL account associated with the item and identifying the department that's responsible for the sale or the expense. So in this case, Department I1. The amount of the permit is going to be posted. When I look at the general ledger review from this posted transaction, you'll see there's my cost of sales permits, Department I1, with the cost of the permit associated with them. So we're not using sub-accounts. We're posting to a general ledger account not only the amount of the transaction, but also what department is responsible for it. I'll show you one more quick example. We'll build an accounts payable invoice here for the SuccessWare monthly licensing fee that we pay. Okay, so I'm going to go down and we'll select SuccessWare as the vendor and create a new invoice. Okay, we'll put our date in and an invoice number. And now we're going to add that item that we saw in the overhead section of the price book, SW21. I'm going to put this as an administrative expense, and it's going to post as an administrative expense, so my administrative department in this case, 00, is going to be charged with this expense. Now, since all of the departments within your business derive the benefit of the usage of SuccessWare, you may actually want to divide this expense amongst all of those departments. A little bit later in our presentation, we'll take a look at how we can take any item on an invoice and split the allocation of that expense amongst multiple departments. But for the sake of this example, we'll post it to one department. And when we look at the GL review, you'll see again, there's my software subscriptions and fees GL account, and Department 00 is getting that expense. Departmentalization on the AP side is really a matter of just knowing which department is responsible for the expense. On the accounts receivable side, it's really going to go back to the type of job that we're running. In SuccessWare, a job is really a combination of two drop-down values. A job class, which talks about the major type of thing we're going to do, repair, installation, maintenance, and then a job or call type, which is really a problem code. That problem code has built into it a department, and that department is going to carry over to the invoice as well as to timecard entries that we create for that job. Let's take a little bit of a look of how we attach a department ID to a job type or a problem code. I'm going to go to the main menu, Setup, and into my reference library. And we're going to open up our job type table. Now again, here's a listing of all the different problem types that we deal with in the business, and I've organized them here by job class. When I expand this table out into modify mode, you'll notice that each of the individual problem types has associated with it a particular department. So as I get down to repair types, you see that my repair department is associated with them. Now when we book a job for a customer, and let me pull up a job here, each job has associated with it a job type. So I'm going to grab this job right here. We'll open it up. And you'll notice that this particular job, it's a repair, and the particular job type here, repair class, has associated with it my repair department. Okay? When I generate the invoice that goes along with this job, that repair department is automatically going to carry over. So remember, let's open up the invoice, that the GL account that's going to be used is based upon the item on the invoice. In this case, it's the repair task. And that repair task has a sale type built into it, or a GL pointer. Well, this invoice item, the task, is going to go to that GL account, but what department is going to get credit for the revenue? Well, by default, it's going to be the department that was associated with the problem type, and there you can see that it carried right down to the line item I added to the invoice. Now, what if I did other work on the job, though? What if I did some maintenance work while I was there, and I want that department to get credit for the maintenance work? Well, that's all right. I can do that. We can change the department number on individual line items on the invoice, and then the revenue associated with those line items will be pointed to the appropriate department. So here we've already got the GL account. We've got the department for the first line. How about we go ahead and add a second line here? So we just did a precision tune-up. Our repair department doesn't do that. I want that credit to go to my scheduled service department, so we're simply going to change the department on that particular line item. Now I'm going to go ahead and post the invoice, and when I do the posting, we'll take a look at the general ledger review, and you'll see here that we have two revenue generating line items, both going to the same GL account, but a different department is getting credit for each one of those lines of work. All right, so departmentalization is a line item level value on the invoice. The departmentalization of agreements is a function of the agreement form itself and not necessarily a job or a call type. When we build an agreement, there's actually a field within the agreement form that's going to allow us to identify what department is responsible for the expense and for the revenue that's generated from the agreement. Here I'm going to build a new agreement using a template. So we're going to add a Comfort Club 1-year agreement to this customer, and it fills in the majority of the values. And you'll notice that the department is one of the values. So here my scheduled service department is who's associated with this agreement itself. Any GL entries that result from this agreement will be posted against the S1 or scheduled service department. So we'll fill in the rest of the values here. We'll move down to the lower portion of the form. Now you'll notice in this particular agreement that the dollar amount, in this case $180, is here, and each agreement visit is then worth $90. Now what I'm choosing to do here with this particular agreement is, instead of taking that entire $180 as revenue right when I sell the agreement, I'm going to defer the revenue. And what that means is we're going to take that $180 that we collect up front, we're going to take the money to the bank, but on our books the money is going to post into a liability account where it's going to sit until we perform our agreement visits. At the time we perform the agreement visit, the system will automatically release $90 of the revenue, the value of each visit, as current revenue at the time that we perform the work. Now the benefit to this is the fact that we get revenue and expense, the expense of doing the maintenance visit, being released at the same time. Deferring revenue is very simple. It's a matter of checkmarking the deferred revenue checkbox, and that's it. The system will automatically put that money into deferred. It'll split up the value of the visits depending upon how many visits we actually have on the agreement itself. So let me finish up the agreement here. We'll put in the 2 visits that we're going to be performing and the months in which we plan to perform them. Now again, that revenue is only going to be released based upon the actual performance of these visits. My last step in building the agreement through this method is actually to go ahead and invoice it. So I'm going to go ahead and pull up an invoice for this agreement. And you'll see when we pull up the invoice that this department, S1, is going to be on that agreement invoice. So there's not going to be any posting to revenue here, but if I wasn't deferring revenue, then the S1 department would actually be getting this full $180 of revenue credit right at this point. Now when I actually go and perform the agreement visit, so let's open up the invoice for an agreement visit, put our date in. We're going to use the button over here on the right that says Visits, check mark the visit that we performed. Now, really quickly, if I was doing this visit as part of another job where perhaps it was a repair job, and the job call type had identified that the repair department is who's responsible for revenue on this invoice, the repair lines would show up as R1. But when I import the agreement visit, the system will look to the agreement form itself, see which department is associated with the agreement, and that's the department we're going to see represented on the invoice itself. Now here, I'm going to import my time card entries, and I'm going to post my invoice. And you're going to see here that even though there's a $0 amount on the invoice, because we deferred revenue, the system has gone ahead and released to my S1 or scheduled service department $90, and in this case a little bit more, $95 of deferred revenue, and moved that into current revenue on our books. Okay, so the right department is getting credit for that work. Another area where departmentalization is especially important is in the costing of labor. This can be via time card entry, salary, or even commissions or piece rate earnings. Here we're going to take a look at how the departmentalization is associated in each of those scenarios. We're going to start off with job-related time card entries. As we remember from our earlier viewing, each job has a department associated with it depending upon the problem type. So in this case we have an R1 or repair department job. When I record time card entries via call progress, dispatch, on-site, and completed time, those time card entries are automatically associated with the department that was associated with the job. Let's go take a look at the employee's time card, and you'll see there's the two time card entries, drive time and on-site, and each is associated with that R1 department. But what if I got to the job and ended up doing work that I want to give as revenue credit to a different department, and therefore I want the cost to go against that other department as well? Well, I can actually make modifications to time card entries and change the department associated with them. So in this example here, I can select that on-site time card entry, edit it, and change it so that it's costing against my indoor air quality department instead of my repair department. Now I'll get a warning telling me that there will now be a difference between the job department and the expense department related to the time card entry, but that's okay, I can just select that. What about non-job related time card entries? Well, time card entries are taking the department from the job itself if they're job related, but what about office time, shop time, parts runs, and so forth? There is no default department to go and grab in those cases. This comes down to a little bit of employee setup. When an employee is set up in the system, each of them are associated with a particular default department. So if I go and open up one of my employees here, you'll see that Drew, his default department is Department R1. Anytime I create a time card entry that's not related to a job, the system is going to try to default that time card entry to his default department. So in this case, when I go ahead and create an office entry for Drew, as soon as I pull it up and go and pop my times in there, the system is going to default that to the R1 department. I can always override that entry. If he was actually in the shop doing some work for the scheduled service department, I could go ahead and change that department, and the cost of that labor is going to post against, in this case, my S1 department. Okay, so to recap, job-related time card entries are defaulting their department from the job type. Non-job related entries default the department from the employee's default department setup. In both cases, we can override the department. What about salaried employees or commission-based or piece rate employees? Well, for salaried employees, let's go back to the employee manager and open up an employee who's set up as a salaried employee. Here on the Wage Information tab, we can see that our employee is set up as salary. But how does the system know where to cost that labor? This is going to be determined by the information we capture on the Salary Split tab. Salaries can be split in one of two ways, either based on timecard entry or based on a hard split. In this particular example, I've used a salary split so that the employee's salary is being divided 50% apiece between these two departments. If I had chosen timecard entries as my option, the system would look at all timecard entries that are created for that employee through the course of the week, look at the departments that are associated with those timecard entries, and proportionally divide the salary between those departments, depending on how much time the employee worked for each. Commission-based employees, or piece rate employees, their timecard entries are ignored, and instead we're assigning the department on a per transaction basis. So here Nick is set up as a piece rate employee, and what we're going to go do is build a commission entry for him. When we build commissions, or in this case a piece rate entry for an employee, and we're making it job related, the system is going to try to grab the department that goes with that particular job. So here we'll indicate the pay type. So this is going to be a piece rate earning. We're going to grab the job number that he was working on. And you'll see that the R1 department automatically fills itself in. That was the department associated with the problem type on that particular job. Again, I could change that department if I wish to do so. Here I'm going to put in the commission amount, or the piece rate amount that he earned for one of the items on that job. Now if he did some other work on that job that's also piece rate based, I can grab that other item, and maybe the second item that he did was a PTU or a maintenance visit, and I want to give that charge for that labor to a different department. Well, again, it's going to default to the R1 department, but I can always make that change. I can go down and select scheduled service, now simply go over and identify the amount, and that cost is going to be posted to a different department for that same job. An area where departmentalization is very important and oftentimes is mistakenly entered is during the process of purchasing and when recording inventory transactions. When you're purchasing items directly for a job, you want to be sure that the department that's being associated with those purchases is accurate to the job itself. Here I'm going to take a job that's on my dispatch board and create a purchase order for it. Now understand, in this particular example, I'm using inventory. If you're not using inventory, the PO process does still lead to the generation of accounts payable invoices, and the posting of those accounts payable invoices will post expense to the general ledger. You want to make sure your department is correct. The way that I'm going to choose the department number on this PO is the same whether I'm using inventory or not. In this case, I've got my job number, I'm choosing my vendor, and I'm going to go down and choose the particular part that I'm going to be purchasing for this particular job. Here I'm just going to simply enter the item out of my price book. The department number I'm going to enter in here is actually going to be incorrect, and I'm doing this on purpose so I can show you an example of a correction that may need to be done. The way that I would really check to make sure I had the right department is to go to the job number dropdown, and the department associated with the job will be listed there, so I want to make sure that those match up. SuccessWare and any inventory system isn't going to like it if you try to pull inventory stock or purchase items for a job that aren't for the correct department. So if I'm doing repair work and I'm pulling parts against my install department for the job, the system isn't going to like that all too much. Okay, so I'm going to go ahead and I'm going to receive this PO. So basically going to indicate that the parts have showed up. And when I've done this, it'll allow me to then import these parts onto my invoice as cost, and they would be costed against the department that actually purchased them. So here I've received them against my install department. Oops, we're going to go into our invoice. We're going to go into our costing window. We're going to click our Tag Import button, and this is going to have this part listed here, the one that I purchased for the job. So I'm going to check mark it, and I'm going to hit OK, and the system generates a warning for me. It says, hey, you're doing a job for Department R1, but you're pulling in a part that was purchased against the I1 department, the install department. Now it gives me a choice. It says you can go back out to the original receipt and you could reverse it and you can correct the department and then repost it. But you know, the system's actually pretty smart and it's going to try to help us through this process. The last step in performing an inventory transaction on an invoice is actually to go ahead and tag the items out of inventory. So I've pulled the item in. I'm going to go complete my inventory transaction through my tag manager, and you'll see what the system is doing for us is it's saying, look, you've got the wrong department. Take that one item that you've already received to the job for the I1 department and let's return it to inventory stock and let's requisition it back out under the right department. So all I have to do is follow the prompts. I'm going to requisition 1 from truck number 1, and I'm going to return 1 to truck number 1. So when I post this, what I end up with is a correctly departmentalized costed item. You don't see that here, but let's go take a look at the requisition that was actually created, and we'll look at the GL review that goes along with it. There's my requisition. We're going to open it up. Let's right click and do our GL review. And there is my R1 department being charged with cost of goods sold materials, exactly as we should. I mentioned a little bit earlier the possibility of taking an AP invoice and splitting the expense amongst multiple departments. Let's take a look at that now. We're going to do this by making use of a recurring accounts payable invoice. Recurring accounts payable invoices are basically templates for things like your gas, your electric, your telephone bill, utilities, truck payments, and so forth, your SuccessWare fee, things that arise on a regular basis that need to be processed. And instead of having to build that invoice individually every time, we can build a template. In that template, we can actually build departmental splits. So how about we open up our rent payment here. So this is the template for my rent invoice. And you'll notice when I built this invoice initially, I built it so that the entire expense of my rent is being charged against my Department 00, my admin department. What I'm going to do in the template to build departmental splits is I'm going to right click on the line item and select split. Now by doing this here in the template itself, I won't need to make these changes every time I use this invoice. So these splits will carry over to the invoice itself. If it's something that changes dollar amount each time I use it, like my gas bill, I'll simply put in the amount and it will automatically percentage-wise divide it up. So instead of putting this 100% to my admin department, we're going to select each of the working departments in the business and allocate a portion of the expense to that particular department. Now, how are you going to do this? You can talk to your accounting folks about this, whether you want to divide it based upon, again, something like rent, maybe done percentage of floor space being used by each department, or maybe allocating dependent upon the amount of revenue brought in by each department. Okay, that's something you can work out with the accounting folks, but the splits are built in. Now when we go and actually generate the invoice for $960 and we post it, we're not going to get one entry to our rent general ledger account. We're actually going to get 4, each department getting their percentage share of the total amount. Now, the template itself can ultimately be modified. So if each year I change those allocations dependent upon revenue or something of that sort, all we'd have to do is go to the template itself, go back to splits, and then simply edit the splits that we've identified. And now these will carry forward for the next quarter, half year, year, depending on how long we want to use this new set of splits that we're identifying. Again, a great tool to get a very accurate departmentalized income statement without having to create multiple line items on the invoice. Well, now that we know how to apply departmentalization to the general ledger, we could take a look at how to report that departmentalization back out when we're running our profit and loss statement or our P&L. I'm going to open up the P&L report, the income statement report. On the left side of the report is an area that lets me identify whether I want to see my P&L for all of my departments, for only separate departments, so individually choosing departments and then combining them together. So I might take a look at, and you're going to see in an example here, repair and scheduled service together, or we can look at a multi-department separate where I can look at departments side by side against each other. By choosing multi-department combined, what I'm going to do is select a couple of departments. How about our repair department and our scheduled service department? And when I run this income statement, what the system's going to do is filter out all of the transactions in all of my GL accounts that were related to those two departments. It's going to add them together and give me a single income statement for both of those departments. It's ignoring all other departments, but only looking at an income statement just for repair and scheduled service. By selecting multi-department separate, what I'm going to get is those two departments, but here you're going to see them listed side by side. So I can use this as a comparative. How much income is coming in from one department versus the other, and then in my left-hand column I've chosen to show the total for both departments together. So all the work that we're doing in the system of identifying ways that we departmentalize are all able to be reported right back out. If you have questions about the best ways to departmentalize within SuccessWare and make the most of the feature, give us a call at our support office at 1-888-251-2779.